How are we doing? Welcome to Wednesday's midweek chart breakdown. Can you guys hear me loud and clear? Just let me know that you can hear me and you can hear me loud and clear. Right, that fixes that buzzing noise. So, how are we all doing? Good stuff. Let me know in the comment section. You guys are ready to rock and roll. It's been an exciting, I don't know about exciting, but it's been an interesting week in the forex market so far. And what we are going to do is we're going to review what's happened so far. For those of you who were here with me for the Sunday evening pre-week webinar, we made a few predictions. We looked at a few things. Good stuff. Good to see you, Gerard, Ivy, Priscilla. Waiting for the rest to come in. Okay, turn my volume up a little bit. Give me a second. Let me do just that. Alrighty, so that should be good. That is actually quite loud. If I make this any louder, it will be okay. So you guys still can't hear the volume. That's bizarre. That is very, very bizarre. Okay, just give me a quick second. One quick second. Okay, is the volume any better now? Let me know if it's any better now. Cool. Right, so let's do this. So every Wednesday, well, most Wednesdays, we might have to take a couple of here and there, but most Wednesdays, either I myself or one of the team, either Tuckbear or Joshua, Wednesday is the middle of the week, obviously. So we do pre-week analysis, pre-week projections, and then we do post-week reviews. But Wednesday is a time where we are going to look at what's happened in the market so far. Now, depending on where we get to, I may do some teaching on carrying on with the Market Maker series. But I decided that I can do that at any time of the day or the night. For instance, I can be up at 5 a.m. in the morning and I can record a teaching video. But I want to keep 9:15s where possible, except for Monday, to be able to actually do stuff with you guys that I can't just record. I can record, but I want to be able to interact with you. And so I think it'll be a bit easier to interact with you looking at charts, or a bit more important, I should say, to interact with you looking at charts than to do it just with a teaching video. So with no further ado, I am going to share my screen and we shall get to it. Righty-ho. So you are looking at GU. For those of you who are new traders, this is the pair of the Great Britain pound against the US dollar. So we call it GU or GBP USD. But the trading nickname, and one of the cool things about being a Forex trader, is the vast majority of the pairs have fancy names, or should I say nicknames that we call them. I don't really know why we do it, but we just do it because we like to feel cool. So the majors are the GBUSD is called the cable, the EU is called fiber, UCHF is called Swissy, UCAD is called Looney. Don't ask me why. Aussie USD is called the Aussie, and New Zealand USD is called the Kiwi. So this is the cable. Now this week I am trading three pairs. So let me take this off for a second. This week I'm trading three pairs, and this is the three pairs we're going to be looking at today. As we go along, if you want to ask any questions specifically concerning the charts we're looking at, put them in the comment section. I am not going to be taking questions until the end if we have time concerning other things. So while I'm looking through the charts, or we're looking through the charts, if you have any questions about the charts themselves, I am more than happy to take them. Any other questions, you're going to have to wait till the end. and hopefully we have time to do so. So, like I said, we're looking at three charts because these are the three charts that I marked out this week to trade. The first one is GBUSD, that's the cable. The second one is EU, which is the fiber, in which there was quite a stunning trade on this one. So some of you saw that yesterday I called a trade and then I jumped the gun because I thought I had it. I broke my own rules, but then I said so that was this one here. Let's move this away. That was this one here. But even after that tiny loss, I still told you guys to mark out this zone because it was going to pay when it returned. Well, it did pay. So we're going to look at the EU, and I took. If you look at this, if I took this loss, but I took this gain, you can see I more than made my money back. And the last one we're going to look at is the USDCHF. That's the Swissy. And I called out a trade yesterday. I bailed early. As you can see, it more than met my target, my original target. But I didn't take the re-entry on this one because I was too busy in GU and EU, and I didn't really want to have $3 pairs in my trading box at the same time. Something to point out real quick. Let me just show you this. So I only trade the majors. So that's here. If you come to file here, actually, no, you come to plus here. Those are the 6 quote unquote majors. There was a 7th pair called the NZUSD that is not an official major, but it is kind of like a major. They all have the US dollar in them because the US dollar is involved in 70% of the foreign exchange transactions in the world involve the US dollar. You see this in your notes in the Market Breakers course. The US dollar is seen as the reserve foreign currency of majority of the world. And so pairs with the dollar in them are a lot more liquid. It means that their spreads are low. There's more people trading them, so there's more liquidity. You can get in and out easily, and you can trust what you see a lot more because the majors are the foundation of all the other cross pairs. So when you see things like the minors, which are the majors crossing against one another, when you see, for instance, Euro GBP here, what that pair is doing is the result of Euro USD on one hand and GBUSD on the other hand. And so I just stick to trading the majors, 7 of them. The problem is each of them has the US dollar in them. In essence, something happening in the dollar will affect all 6 or 7 pairs. And therefore, when you are diversifying, because we teach in all trading and all investing to diversify your risk, it means don't put all your money in one kind of asset. If you are trading majors, to a degree, you are trading the dollar. And most of them will be correlated at different at the same time. There'll be 1 or 2. For instance, if you look at the USDCHF, you can see that went down today overall. Let's put that in there. So it started, it found support, then it came down. If you look at the EU, it started, it found resistance, then it came up. That makes sense because they're inversely correlated. The EU has the dollar as the second currency, so that's the term pair. And the USD has the dollar, this one has the dollar as the first currency. That's the reference pair. And so they are literally mirroring each other. And you don't want to be in too many different trades of the same mirror currency, the US dollar, because you are exposing yourself to too much stuff. So I was in 2, GU and US and EU. So I stayed out of Swissy. Now, let's start from here. So we're going to, and many of you guys, I've told you how I trade. We teach you different ways to trade, but I am primarily, as are most of us, the instructors here at Israel Keys, we're most of us intra-week traders, meaning we are looking to get into a trade and hold for 2, 3, maybe 4 days maximum and come out. So Tokpe, for instance, is a classic intra-week trader. He'll be in a trade for 3 days a week. Joshua is something similar. I'm a low class or low level intra-week trader in the sense that I'm tracking my trade intra-week, but I'm breaking it up into intra-days. I like to be in and out in the same day. Don't ask me why. It's just the way I roll. It's the way I work. Something we'll teach you here is how to discover the kind of trader you are and stick with your personality. So I'm not Tokbe's not me. I don't like going to sleep knowing my money's in someone else's hands. Just the way I function. Secondly, I kind of mastered what goes on a chart intraday. So I spent years fine tuning it. I can see stuff on intraday charts that most other traders cannot. And as a result, I know how to get in and out in a day and then get in the next day or whatever, except it does something overnight. So that's how I work. So I'm going to start with a fresh chart here so that we don't, or with fresh charts so that my analysis here doesn't get in the way. So let's start with EU. And I'm going to load my template. If you're new, I'll show you how to do this, or we will show you how to do this later on. Let's get rid of that. So this is, no, I'm trying to get rid of you. 1 second. Okay. No, get rid of that. There we go. And get rid of this as well. So let's start with, now, because of the way I trade, I go weekly, 4 hour, then 1 hour and 50 minutes. So I use 4 charts to map myself in the market and what I'm doing and where I'm going. That's what works for me. I'm an intra-week / intraday trader. If you are an intra-week / swing trader, you want to start from the monthly and work your way down. If you are a scalper, you want to start from the daily and work your way down. But you want to have at least 3 charts. Write this down. You want to have at least 3 charts. Let me write it down for you. You want to have at least 3 charts that you are tracking. Have at least 3 time frames, sorry, not charts. Time frames you track in your trading. For me, the first time frame is what I call the bias time frame. The second time frame is what I call the reference time frame. The third time frame is what I call, or the third and the fourth are what I call the execution time frame. You can have other names for them. So for me, the weekly would be my bias time frame. The 4 hour would be my reference time frame, meaning that's the time frame I'm making my decisions concerning. But I alternate between the 1 hour and the 15 minutes to actually execute, meaning get in and out. And I'll show you in a second. Of course, the daily time frame is the king for a daily bias. So if I'm entering a trade, I want to know what that trade's likely to do today. I consult the daily time frame. I've done some real study into that. That's given me a lot of an insight on how that works. So starting the week, I looked at my weekly time frame. Now, EU, this is what's going on here. This candle at the very end is how the week started. But at the start of the week, we couldn't see that candle. So I'm going to just take it out of the way. That is all we could see at the start of the week. Come on. Let's see. Cool. That's all we could see at the start of the week. That last candle there. 1 second. Let's try this now. Yeah, so that's all we could see. So my job, since I'm an intra-week trader, is to figure out what was this week's candle likely to look like? That's the question. What was this week's candle likely to look like? Because if I can figure out what this week's candle looks like, I can then drop down to a 4 hour chart. And on a 4 hour chart, each divider is a week. I'm not sure why this is part of my template. I've got to fix that. So each divider is a week on a 4 hour chart. So for instance, this entire space here is the weekly candle that is currently forming. So on a 4 hour chart, each divider is a week. We dealt with that on Sunday. If you haven't watched the Sunday video, if you're a registered student, it's in the Telegram. If you're not a registered student, become a registered student. Now, so at the start of the week, again, this is all we would have seen. So the question is, So this here is this 3 dividers are equivalent to these 3 candles. What is this candle likely to look like? The next candle forming. Let's see. Somebody's trying to say something to me. Okay. So what's this candle likely to look like? Well, and what is price likely to do? So bear in mind, this week has already started forming, but just ignore it for now. Pretend like you can't see that it's there. So what's been going on? Let's just show you real quick, because you got to understand the long term. When you're trading a pair, you want to understand the long-term picture. That's why I only track 2 or 3 maximum pairs every month. At the start of the month, I make up my mind. I'm tracking 2, maximum 3 pairs. I've made up my mind last month and this month. These are the 3 I'm tracking, because I want to have a long-term picture. I don't want to have 20, 30 pairs I'm watching and just jumping in and out of without having a long-term understanding. Because like we looked at on, was it Sunday or Tuesday? I think it was Tuesday, aka yesterday. Higher time frames control lower time frames. So price is doing something in the long run. What it does in the short term is tied to what it's doing in the long term. If you don't understand it, the long-term picture, you will have problems in the short term, because the things you're seeing in the short term are fulfilling a larger picture. You want to understand the larger picture to be able to get what's going on in the short term. So this is what's going on real quick. I'm just going to show you this real quick. That is what we call a market gap or momentum gap. It is a liquidity profile. In essence, it's a sign that a market maker did some significant business there. Price leaves it real sharp. This is over the last 3 years. Forms that there and runs back. We knew it was going to come there. Now, we did some Fibonacci training yesterday. So let's take a Fibonacci there, and you will see that the same thing that works on a 15-minute chart also works on a weekly chart. Price has come to the magic level. Can you guys see that? For those of you in the beginner section from yesterday, we have our magic section there. Oh, I say magic section. We have our level there. Actually, I lie. Let's do it the way I taught you to do it. You always draw. To understand it properly, always draw from the highest price to the lowest price. And there we go. So price is at a discount right there. It's at the 21.4 level. Can you see that, guys? See, this works even on a weekly chart. And so from that level, over the long term, now bear in mind, it took 3 years. Can you see this? It took 3 years for price to do what it's just done. It may take another 3 years for it to fulfill its target. However, here we see it is broken market structure on a weekly level just there. And look at how price respects that level 3 years later. Spectacular, isn't it? We taught you. You really need to believe these things, that price respects significant previous levels. And so when it came up there the first time, that level of the market structure break there, there's a reaction. It comes back down deeper and pulls up again. And as you can see there, there's a reaction. So something significant is going on here. This is a key level, and we expect price to stick around there for a while before it makes up its mind what it wants to do. Now, of course, there are fundamental factors going on. There's a market crash, a crisis, there's the coronavirus and all these things. But just purely from technical analysis, we can see that we expect something to go on there. And so what do we then do? So in essence, we expect something significant, either price to break through there with momentum. But as you can see, the last 3 times it tried to break through that level, it was rejected. It tells me that there is significant selling power there. Somebody with deep pockets has that level currently defended. Also, as you can see here, price seems to be going into a sideways consolidation. That's a sign that there's a significant move is about to break out either way. So I expected at the start of this week price to visit that level one more time or just to drop. That's on a weekly chart. If I drop down to a daily, let me open another chart for that. If I drop down to a daily, EU. I'm just going to do it this way. It's going to be quicker this way rather than trying to get rid of those things. Right. So on a daily chart, what's going on? So let's look at this in a daily chart. There was a downtrend. Then a market structure break here, which drove price to the upside. But price is hanging around that. See, that's the same level there. It's hanging around that market structure break. So we haven't gotten any traction at that level. Also, on a daily chart, if I stick a Fibonacci on it, from low, actually I'm doing it the wrong way, from high to low, to make it easy for those of you. As you get more experience, for those of you who are new traders, you can do it from low to high, high to low. It doesn't make a difference. But so as not to confuse you, let's do it that way. And so, as you can see, price has made a high there, broken market structures, dipped back into a region of discount. It hung around the 21.4 level. And it's gone 1, back, 2, back, 3, back, and then it went 4 today. But that level is holding it there. Of course, when we started the week, today's Wednesday, this was all we would have seen. So the question is, based on that, what did we expect price to do? I always take Monday off. That's just me personally. First of all, I like to rest. Monday is my only off day. I'm very busy in the weekends. I lead a church. I have community things to do. I have a family. And remember, I taught you the principle of the candlesticks, that it usually will start. If it's an up week, it'll make a low and then move up and then close in the middle, and vice versa. So I use Monday the same way I use the Asia session in the day to figure out what it's likely to do. Will you miss some great trades on a Monday? Yes. Do you have to understand you can't get every single trade? Yes. Get over it. There will always be great trades you will miss. If you feel like crying every time you miss a good trade, you need to get a slap upside your head. You're not going to catch every significant move. You want to catch a few a week and you're good. So, and trading is like buses. You miss one, or you wait for a while, then one comes along. And so this happened on Monday. This year happened on Monday. Price rallied up here to the 61.8 level and then dropped. And so going into Tuesday, I'm going to drop down to a 15-minute chart now. Going into Tuesday, so this was Monday here. Going into Tuesday, I'm watching. Now, that's the market structure break level. And I'm going to show you what I did on Tuesday. So price comes here, and then it starts to fall. The moment it starts to fall, you see this here, it breaks a market structure there. So coming into the week, into the day, from the Asian session, price breaks market structure and falls out of bed. I'm going to drop back down to a 1-hour chart now. And so on the Telegram group, I drew you guys out 2 levels, if you remember. This was the first level I drew. And this was the second level I drew. Why? Because we understand price is hunting liquidity. We know where it's coming from. We know where it wants to go to. It's coming from here. It's gone there. This is what it's doing along the way, but it's going to be attracted to areas of liquidity. Now, I must confess, I broke my own rules. Like I've taught you guys, when I take a trade during the day on an intraday basis, I always like a liquidity run or stop hunt, a manipulation. So for instance, this is a classic example here today. This was today here. This range here is today here. You can see that before price made this run up, it takes out this level there. That's an intermediate low to run down into this liquidity area here. It also takes out this one, but this one is from the previous day. I like to see a liquidity run or liquidity hunt intraday, meaning a manipulation within that same day. This fulfills the criteria. Yesterday, when I took my first entry here, which I lost 1% because I broke my own rule, I convinced myself that there was a liquidity hunt here. The problem is, as you can see, this level was from Monday. Could it have worked? It definitely could have worked. 70 times out of 100, it will work. I like that extra confirmation. I'm a risk averse trader. I used to be a cowboy and a gambler. I don't do that no more. Now, when I trade, my money is very important to me. And I also know I'm giving signals to people who are trading their money that's important. And so I took a trade here. Let's see if I can, okay, no, it's not on this account. But I took a trade from down here. So I took a trade from here. I was reaching, I think, where was I reaching at the time? I took it from down here. And I think I was, yeah, yes, this was the level I was reaching for. Not you. So there is that there. That's the level I was reaching for. As you can see, we got there today. But yesterday, and I put my stop loss here. So this was the trade. Right, let me see. Insert. 1 second. Insert indicators custom. Pre-order tool. Let's put that at 1%. If you're a student, relax. I will send you this. I usually trade with roughly 2 lots. I will send you this particular indicator. It's very handy. I want 10 profit lines. Right. I want my font to be blue. And I want my entry to be blue as well. My stop loss to be red, my take profit to be blue, and we are good to go. So you're going to see why I love this indicator. It lets you project or review trades. So if I put that there, this was my entry. I put my stop loss down here. Actually, no, I think my entry was further down. My entry was about there, in that level there. Let me get rid of this for now, because at the time I was respecting this first zone. So let me get rid of that. So let's do that again. 1 second, sorry. Pre-order tool is, that's wrong. Those lines should be green. Yeah, my take profit line should be green. Red, debt, green, bank. So close, let's put that down again. There we go. So I was in there. I put my stop loss. Actually, I think I put my stop loss there, yes, because I was banking on the fact that this was going to be the low of the day. Sometimes you get it wrong. And so I lost 1%. But if you remember, for those of you on Telegram, let's see if I can find it. Give me a quick second. Let's see if I can find the Telegram group. Right, let's go up. I think that's it. Is that it? There we go. So let's see. You guys can see that I sent you this. What time was this? So this was yesterday at 1:28. So my prediction based on my standard rules, I said there, I jumped the gun. So I called that. Order block coincides with the D1 order block. Can you guys see that on the screen? Is that too low? Let me know if you can see it. Let's see if we can magnify it. There we go. So this is from our Telegram group. And I called that this was going to happen. In fact, let's see if I can find one from earlier before I go down to that level. Okay. Let's see. I think it's this one I'm looking for. So there we go. So that's the beauty of understanding what you're doing when you trade. You guys are quiet in the comment section. Let me know that you're still there. When you are trading, a loss. So I took the loss here. The loss was here. That was the same day as it. This was on Tuesday. The moment that trade lost, I knew where the real entry was going to be. And so I gave you guys that signal. I actually put in a limit order. And what do you know? We get there today, and price does the exact same thing. Now, notice today, when it dipped down into that level down there, there was an intermediate liquidity there, as you can see. So in the same day, price runs down to that level, but it takes out that liquidity. That satisfies my rules. And then bang, we went up. So let's see if I can find it for you, because I did take that trade. Give me a quick second. Oh yeah, I'm currently in a trade here. In fact, I am going to go ahead and close that trade there. So I'm going to go ahead and close that trade there. Right, so I'm still in this one. I'm going to leave that one open. Righty who. So anyway, that's GU. That was a very nice trade today. As you can see, I'll show it to you in a second. So let's see. Give me a quick second, folks. See if I can find the trade I'm looking for. Where are you? Where are you? 1 second. Let me check my MetaTrader on my phone. For which account I took this trade on. Right. Not you. There we go. Okay, so it's 222. Okay. Where is 222? Not there. 222. There you are. Okay. So it was, let's see, I think that's you. Right. By the way, I'm only showing you my demo accounts when we trade, or when we do training. There's a legal reason for that. Legally, you guys are going to sign a disclaimer that we say this. We teach you. We have to put this in our contract documents that all teaching is done on the demo account. So that way, we are not seen as investment advisors. We're not responsible for what you do with your money. So we're doing our webinars on demos. Whatever you choose to do in your life is your choice, but you can't hold us to ransom for the decisions you make. So that's why I can't show you the trades on my live account on screen. I can only show you them on my demo account. Now, when I give the signals and the results in the groups, I can actually show you the live results in the groups. But when we broadcast, for this reason, I have to show you the demo results. That's just the way it goes. Right, so let me find that trade and knock it on the charts. Now, you guys know, like I told you, that I had a broadcast today. And so when I am not able to sit in front of my charts, I'm usually very, 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 very extremely cautious, because a big loss, a small win can become a big loss, or vice versa. Now, I am kicking myself, absolutely kicking myself, because when I was going in for the broadcast, I told you I was closing my trade. I was going to come back to it after the broadcast. Well, it didn't give me a chance to come back to it. This is what price did. Right, so that is what it did. As you can see, that was my entry. That was my stop loss, which lines up perfectly with this level there. 1 second. It lines up with this level there perfectly. Insert shapes. Now that's the order block there. How did I know? And so remember, I just showed you that I gave you guys this from yesterday. Now, how did I know what was going to go on? And that was my that would have been the level I would have held for, which is this level down here. That order block down there. But I'm not waiting till I get to the other block. The moment I get in here, I want to close some way short of that. Now, if I'd held that trade to its completion, it would have been, so as at the highest point today, and I'm really kicking myself. Remember, I put that in the group. I said that if I'd held onto this trade, it would have paid my rent, and I live in London, so go figure. But this is why. Now, this was, 1 second. Let me just find it real quick. This was £682, $82 was what this trade paid me. And still, it could have paid a whole lot more. So think about it. So it did 2 to 1 before I closed, because I was going in for a broadcast. I was interviewing the superintendent of police in my borough and a local councillor, local government official, for a weekly show that I do. That's not related to trading at all. It's related to my community and faith activities. And therefore, I kept, for the first 15 minutes of the show, I kept staring, because my charts were on in my room while the show was going on, guys. Confession. Don't tell anybody. This is a secret between you and me. But I was on TV, or I was on YouTube doing this amazing, in my opinion, show. And I was staring at the charts moving up and down. Let's see, what time was this? This was, yeah, so that's 3:30 server time. So that's 1:30 our time. So 30 minutes into the show, I realized I couldn't focus. So once that happened, I just closed the trade. I wish I hadn't, because as you can see, it did almost fulfill my objective. If I'd held on to it, it would have given me 1, 2, 3, 4, 5 to 1. Now, if 2 to 1 was $682 here, that means 4 to 1 would have been 1,000. 600 times 3 is 1,200 plus 80, 160. So 1,360, right? Would have been if I'd held here. Add another 340, 350, 340. So pretty much 1.7. So yeah, like I said, my rent, it would have paid my rent or thereabouts anyway, almost paid my rent. Sadly, I was out at 2 to 1, but still 2 to 1 is not bad. $682 is $682. Now, how did I figure this out? Well, very simple. Remember, we looked at the weekly chart, and 1 second, get rid of that. This told me on the weekly, look at this. So we've had a drop here from this level. Let's just stick that on there. I can almost guarantee you, let's go back down. So that level there, can you see that level there is that same level here, and that one there, and that one there. You can see how previous levels are respected. So remember, I told you guys about significant historical levels. Starting this week, this year, sorry, because each divide on a weekly chart is a year. Starting this year, we knew there was a significant historical level there. Price respects it here and there again. And remember, it is pretty much the level of the market structure break from here. So that's what it is here. It is just above It is a market structure on its own. It's a higher one, but there we have it there. And so we're coming down from there. As we do that, we form a weekly order block here. Weekly price action is king. It may take a while, but wait for it. Though it tarry, it shall not tarry. And so price breaks out of that weekly zone. But this particular week, that was last week, it is forced to close down beneath it. It then has two places to go. Remember, price is seeking liquidity. We've taught you that. Ask yourself a question. From this point here, where are the likely liquidity regions? If price is already in this order block, it has two choices. It can go down on a weekly level to find liquidity here. This is the next liquidity level on a weekly chart. It's down here. Or you could take this entire huge candle there. So you ask yourself the question, how far, if price started the week here, this would take it to get down here, 240 pips. To go back up into this region, it only has to travel back to this order block here. It only has to travel between 39 and 80 pips. Let me ask you this question. If I told you you could get your salary, if I was your boss and I told you could get your salary from two places, from two branches. One branch is 5 hours drive away, and the other branch is a 15-minute taxi away. Which of the two branches? Branch A is 5 hours away. Let me type that down. And branch B is 15 minutes away. So branch A is the branch of the bank, 5 hours away. Branch B is only 15 minutes away. Which of those two branches do you want to go get your salary from? Let me know. Which of the two salaries or these two branches do you want to get your salary from? Give me the comment in the answer in the comment section. Now, I know what the answer is. It's branch B. In essence, if you have two liquidity levels that are so far away, or so that are two liquidity levels, that are so different in their distance from where price is right now, price is going to want to tap in to the level of least resistance. It's going to go up here one more time because it can get a push from here to then start to run either down all the way down here or back into this level here. So when it runs up there, there's a liquidity pool there, right? It comes back down. There is another one here. This line there, this one here, where the engulfing went from and came back, this has now formed another order block. And so when it comes back down there, it is going to meet a liquidity pool. Unless the pressure from up here is enough to send it all the way down in one go, which is very unlikely, it's likely to spend time at least in this level, or in this level at least for a while. Even if it eventually breaks south, we expect it to spend some time there. So we drop down to a daily and we begin to watch what happens on the daily chart. So there it is. It drops here. It comes out. It comes back here. And as you can see now, let's refine that level on the daily chart. Sorry, that's not what I'm trying to get. Let's refine that level. Not you. That is now the order block on the daily chart there. Can you see that there? That there. Let me make this bigger. I'm going to get rid of this one for now. And also this one for now. That is the daily order block level. This is Wednesday, Tuesday, so this is Monday. Now, as of Monday, price has left this level right? It's engulfed. So let me borrow this line here. This is now a daily engulfing. It's left that level. So this means that it was a broken market structure on a lower time frame. An engulfing on a higher time frame will be a market structure break on a lower time frame. And it's come back down to dip into that level. I'm going to get rid of this as well, so I don't confuse you with the lines. When it's in here, when it comes back in there, we want to see a stop hunt. In essence, we want to see price take out these lows here, because there will be liquidity resting beneath them. Now, if we drop down to a 4-hour chart, notice I went from weekly to daily, down to a 4-hour chart. There we have it. We can now refine the order block even further. That's the 4-hour order block. So going down in time frames gives you more precision. So your risk exposure can be lower. This here is why I say I jumped the gun. First of all, I wanted an intra-day stop hunt, but secondly, this was the level that was formed last week. This is a 4-hour chart, so each week divided as a week. This level was formed last week. The way price goes is a market maker is going to want 9 times out of 10 to take out that low to tap into that liquidity before going up. It could break all the way further down, but I expect this to happen. Even if it doesn't reach my target, I expect it to see a bounce before a fall, which is what I was banking on. Now, if you look at this, so this is a 4-hour chart. This is what it is here. Also, the way we teach you to trade here at IKW is when a week starts to wait for a 4-hour stop hunt, whether or not you've drawn out this in the first place. As of, on an hourly chart now, as of yesterday, this had not breached this level here. You could argue about this one here, but I'm not respecting that one there. Why? Simple. Fibonacci. Again, let's do it the way I taught you. So you draw it from low, meaning 100 is at the top and 0 is at the bottom. If you're buying, you want to buy when price is cheap. So this level is formed just beneath the 21.4 level. Experienced traders, you would see it as 78.6, because experienced traders, you'd be drawing it the other way. But I'm teaching my students this way to make it clear to them. Lower prices, higher prices. Lower levels, higher levels. The fact that this low here coincides with this order block, it was begging to be taken, which is where I got my Telegram signal from. Look at that there. See that? Remember I said that was a daily order block? That coincides. The daily order block coincides with this here. So that's the daily order block there. But we've refined it now to a 4-hour level. Also, I can take that from there and I can put that there, because in that space there on a 1 hour, to me, that is the significant black candle. But to be on the safe side, let's just draw it up to there. So it takes the whole 4-hour order block. There was a touch here and a touch there again. So yesterday, when it touched here, I was asked, why didn't you re-enter yesterday? Because I'm not buying that. Because this is a classic retail trap. It's called a double bottom. Let me know you guys are still here. Retail traders are taught, when you see this, it's a sign of a secure level. Price is going to rally. No. We know as experienced market maker profile traders, when you see a double bottom or a double top, Tucker calls them clean highs or clean lows. In essence, they're almost at the same level, not too far apart from each other, and there is an order block or a similar liquidity profile just below. You can bet your grandma's pension price is coming there. Let's put this in there. Double tops and bottoms are begging to be rated. Double tops and bottoms are absolutely begging to be rated because there's going to be a whole lot of liquidity in that area. You can look at all your charts. In fact, let me give you a brief. Let's see if we can find any just to show you. Let's see. Double. You see this here? Those two there. Although they're not exactly double, but still close enough. Bang! Price goes to clear that level out and then goes up. Let's see if we can find any more. You know what? For the sake of time, I won't. But just go through your charts and look for that phenomenon yourself. And so, I knew that the place to wait for was beneath that level, beneath this particular level here. And so I waited for today. And notice where I put my entry. Roughly 2 pips to 2 to 3 pips. There you go. Okay, that's 5 pips actually. But roughly 2 to 3 pips. But for some reason, why did I pick 5 today? I'm trying to remember. Oh, yes, I picked 5 based off this. So I took my entry based off this candle here. You can see that blue line on my chart. I'm going to teach you guys about that moving forwards. That blue line means something. It's a significant time zone. And so the blue line on that, in that order block, was where I placed my order. And then from there, I think I took 3 pips from there. Yep, 3 pips from there. My stop loss just beneath the zone. Why did I pick that as my target? I will show you. Let's go down a time frame. You see this here? The same principle, let's take this off the screen, I took for my entry. I want to see a low rated into an order block. I want to see the same on the upside. So I have 2 choices. On my way up. Now, let's do this. Let's see. Yeah, let's do it that way. 15-minute chart. Okay, 1 second. My server is misbehaving. Okay, that's fine. We'll use an hourly chart. So I'm going to take the Fibonacci off so my screen doesn't look too cluttered. And I'm going to take these lines off. I don't need them anymore. I'll leave that one. Now, if this was my entry on my way up, I'm looking for highs that have already been formed to be raided into an order block. So I have a couple of options. Option 1 is this high here. This is the first high that I could go off. So I could wait for this high to be raided. What's the order block directly above this high? It's this one here. If you are an experienced trader, you're going to complain about how I'm drawing my order block. Just ignore me for now. There's a reason I'm drawing it this way. It's so the newbies can get it. That will be my order block. Now, experienced traders know this is the real order block here, right? We know that. But we're teaching the newbies step by step, so let's just draw it all the way down there. So I could have planned to get out of this trade inside this area there. Why did I not choose it? Simple. This here would be the first 1 hour market structure break after my trade began. If this trade is sponsored by a market maker, I expect it to at least break market structure and then keep going. I don't expect it, because if it breaks this market structure here, it's a sign it has more legs. So if it breaks market structure the first time, it will form a retracement. Remember our assignment yesterday. I'm drawing it the wrong way again. Old habits die hard. So it's formed the retracement at 61.8, and it's going again. Even if it came all the way down to a 21.4, which it very well could have, I still expect it to push up higher. So I don't really want to be getting out there. Second reason why I don't want to get out there is, if I put this here, if that's my risk, 1, 2, 3, 4. So yeah, well, this is not 4 yet. Remember, I told you guys I go for minimum 4-1s on my trades. Now you can say, well, you came out at 2-1 here because I just wanted to preserve my money. It was the first trade I took, today, after missing out or after taking a loss on it yesterday. So I was just like, I don't want to take another loss while I'm in case, because this could have come up here and gone back. There's no guarantee this works until it breaks market structure. There's no guarantee it works. And so 4-1, 1, 2, 3, there we go, was at least here. But the real reason I didn't pick that was, if you don't choose that high, this is the next high. Right? In which case, this would be the other block that it would be running into. And initially, when I opened the trade, this was my exit, just beneath here. So I plan to exit just beneath here. Now, when I'm going to be away for now, so I plan to exit just beneath there. And then I took a second look at this. And if you notice, this is very, very close. In fact, you would want to get out again, roughly 3 pips before the other block. So let's see. If that's the other block there, that's exactly 3 pips. So this came to exactly 3 pips before the other block, which is where I think my initial exit was. 3 pips above or beneath other blocks is how I work. And that was prophetic. But the reason I put it up there, and I could be wrong, I just have a hunch, is if I draw Fibonacci the other way. So if I draw a Fibonacci, again, I'm doing it the wrong way, high to low. If I draw Fibonacci the other way, from the top down to the entry, we sold at a discount, or we bought at a discount, we want to sell at a premium. This is the 61.8 level there. I expect price to at least visit it one more time. If it's going to revisit it one more time, then this becomes a very appealing level of liquidity, because someone is going to have put their stop loss there. Someone who sold here is going to put their stop loss there. So I'm thinking like a market maker. I am guessing they have the information I don't, but looking at the charts, I'm guessing there's going to be a pool of liquidity up there. If there is a pool of liquidity up there, they're going to want to tap into it. And if they do tap into it, the order block, all liquidity profile that they will then be looking at will be this one right there. So I have a hunch. I don't know for a fact. The price will breach that level. Second reason why is, if you drop down to 15-minute chart, it is a double top on a 15-minute chart. I might be wrong. It's just too appealing for me. So I thought that would be a good place for them to want to drive price before they shut down that move. That's why I put my exit there. Sadly, I came out too early. I was trying to conserve, and I still battle this. So if you guys, I mean, you're gonna deal with psychology your whole journey. A bird in hand is worth two in the bush. Do you let your profits run, or do you take your profits immediately? Some days I'm a run guy, some days I'm an immediate guy. On this day, I chose to take it immediately. It is what it is. Right. So that was EU. That was the week so far in EU. Now, what do I expect for the rest of the week? Well, I've told you, I kind of expect this trade to at least get to that level there. Now, if you go back to a 4-hour chart, which is my, so in essence, when I call it my reference chart, I'm really trading 4-hour charts. I'm just taking my entries on 1 hour, 30 minutes, or 15 minutes. But I'm taking my cues off of a 4-hour chart. Well, as you can see, price is being held in a consolidation. There was an upward move. So there's an upward trend here. It ran into that level. What level is that? That's that significant long-term significant level on a weekly chart. Excuse me. And then it dropped. Well, let us put a Fibonacci there. So actually, first of all, let me get rid of that. Delete. Fib. I remember this time. From high to low. What do you have? So if this is the market maker range we're dealing in right now, all price has done is come down to the 61.8 level. Now, if you look at this as one big upward move on a daily, you see this a lot of times. Now, when price first explodes to the upside, I think a weekly will show it even better. When price first explodes to the upside, it is very, very common that the first retracement only comes down to the 61.8 level. Of course, if you're drawing your fib the other way, if you draw your fibs in the direction you're going, whichever direction it is, that will be this the 38.2 level. That's very common for a first move. And then it's usually, I gave you guys the assignment yesterday, that when there's a high explosion, usually the first retracement is a shallow retracement. And then it's the second leg, usually, that gives you a deep retracement. So I would not be surprised at all if price takes off from here this week and pushes higher to challenge this high. That high there. And in so doing, to run into that weekly order block. Or, even better, on the long run, to come into this one here. But this is the one I really have my eye on. Now, this could take a couple of months to get to. But I really think someone significant has their eye up there. Eventually. However, we're in a pandemic, and certain governments are still botching their response to the pandemic. So we have no idea what's going to happen, in which case the alternative scenario is, as you can see, there was a little bit of a retracement here. We've got all this way to go. We can come down into the fair price area, which is between 61.8 and 38, in which case this would be a fair value price. Or if this whole upswing is the expansion, we would expect to find a sweet spot retracement in this area here. I call it the target zone. One of my old mentors calls it the sweet spot. This would also be very ideal. In which case, if you expect price to drop down here and then go up, it means that over the next few weeks, we could potentially expect a dip. At the moment, price is being held in a consolidation, in essence, in a sideways pattern. And so when you see price in a consolidation pattern, until it breaks that and where's the consolidation? We're bouncing between this level and this level here. Until it breaks this consolidation, or on a wider scale, let me show you this. This is actually how I would define the consolidation. It's from there to there. That to me is a current consolidation. Until it breaks, you just keep tagging from one end to the other, which is why I am not holding on to any long trades in EU just now. That's why I'm in and out every single day, because price hasn't made up its mind. You can see this from here to here. It was clear where it was going. So for 1, 2, 3, 4, 5, 6, 7 weeks, it knew exactly what it wanted to do. It's come down now for 2 weeks, and then it's not sure what it wants to do in this 2-week span. So I'm in and out every day. So today I was in here. If I hadn't closed it early, the moment it came up here and started messing around here, I would have been out in this range somewhere here. I would have been out probably around here, which would still have been a very good chunk of change. So what do I expect EU to do tomorrow? Well, it has a couple of options. That's not okay. Let's see if I can find this on a different right. So will it show me on this one? Okay, it will show me on this one. Cool. So on here, this is what I expect tomorrow. Let me get rid of this and start from a fresh slate. This is what I suspect, I should say, tomorrow. If you take that, this here, to today's expansion, Israel, draw your Fibonacci the way you taught your students. Sorry, experienced traders just draw it in whatever direction we're going, because we can flip the levels in our brain. But I don't want to confuse you guys. So there we go. So we've had a roughly 61.8 level. Let me know you guys are still here. Now, some traders draw their Fibonacci using the bodies of the candle, not the wicks. I do both to see what stands out to me. So if you did that, that would be that. Yeah. So roughly same thing, no difference. Cool. So we'll leave it that way. Sometimes something stands out when you do the bodies as opposed to the wicks. So there you go. It's roughly come down here. Again, like I said, for the first leg, that's usually a very common place for it to dip to. It could dip all the way down to 38.2 or 21.4. In essence, it could come back here. So you have option 1, that it comes back here tomorrow. Option 2 is that this order block here holds it up. And I would say, I think this is very likely tomorrow, that price will middle around doing the Asian region, maybe make a high here as a manipulation, dip down into this order block. So this is what I suspect. Okay, that's okay. What it's just done is giving me cause for pause, but let's see. It could do something like this, and then go to the target I set yesterday. So in London tomorrow or in New York, I'm going to keep my eye out for this to happen. And if I see a significant reaction in that region, what's a significant reaction? For me, a significant reaction would be a 1 hour engulfing, a H1 engulfing between 6 and 10 a.m. London and 12 and 3 p.m. London. Those are my sweet spots. So if I see a 1 hour engulfing or market structure break on a 15-minute chart in the bullish direction between those two time frames respecting this zone, I'm going to step up with confidence and take it. However, it could do this. If it breaks this zone before or during those two time frames I just told you about, then this then becomes my prognostication. So if I see this happen before 6 a.m. or between 6 and 10 or 12 and 3, then I am switching to this profile here. If it breaks through here, it could come here. Very unlikely. I don't think this is going to be respected, but it is possible. It could come down here. Or it could just come all the way down there. So remember, like I taught you guys on Sunday, you come into a day or a week with a trade scenario in mind. You're not married to your scenario. It could be wrong. It could also be right. But you don't just jump into a trade that you haven't pre-analyzed. So I have two options. Option one is this. This here. That's option one. Option two is this here. Again, I suspect that's going to be respected, but you never know. So that's EU. Do you guys get that? Because I want to go to GU. GU was very nice to me today. Right, so that's EU. Now let's do GU. One second. I'm just trying to find the trade. Okay. There we go. Found it. Okie dokie. So let's get a fresh chart. So same principle. So weekly. There's the weekly chart. Again, before this week started, the question is, what is the next? What's the next weekly candle likely to be? We don't know. What we do know here is price week down in there, came back up here and formed an order block there. So I'm going to be a lot quicker with GU because I've shown you the mindset already. So I'm just going to rush through this quickly so we can finish in time. There's another block there. Right there. And that's a weekly order block before this week formed. Well, what do you know? This week, ta-da, comes into the order block and respects it. This is very predictable. Why? Because there was a market structure break here on a weekly time frame. Weekly market structure break, very powerful. And if you do that, if you put a Fibonacci on that, so we have the weekly market, weekly order block there, price broke structure. If you put a Fibonacci there, high to low, that is a perfect Well, I put 23.6 here, not 21.4. So let me change that. Let me change that. I just took the one that came with the standard Fibonacci. I haven't actually adjusted it on this platform. Cool. There we have it. If you drop down to a daily, you can see it more clearly. So that's it on a daily. Price, that's the order block on a weekly. Now on a daily, remember this is the entire weekly order block. On a daily, there is another one that forms here that we can refine. Now, when we're refining order blocks, the lowest refinement I will do is 4 hours. Anything lower than a 4-hour order block, I'm gonna leave it as it is in terms of what price is dipping into. But we can refine it there, so you can see that daily order block is still within the weekly order block. Let's take away that. So that's the market structure break there on the weekly. On the daily, the market structure break happened much earlier on a daily. Let's delete that. On a daily there, that's the market structure break there. And as you can see, price, as I taught you before, price likes to return to that level of the market structure break. We saw it with the EU on the weekly. We see it here again. And so you can see here that that's the market structure break level. That's the order block. There's a confluence. And that is within the so-called sweet spot. Can you guys see that? That's perfect. So you're looking for things to confirm to you that your analysis is correct. 1, market structure break. 2, daily order block there. 3, this is between 38.2 and 21.4, which is where I've told you we like to buy. When we're selling, it's the opposites between 61.8 and 78.6. So can you guys see why this was a perfect place to expect something to happen? Can you see that there? Well, what do you know? Once that happens, on a daily chart, we then have a daily engulfing. I mean, this is like candy from a baby. Look at this here. This is like candy from a baby. So we have 4 confirmations of 4 things going into this trade. Market structure break, expansion, the break level, the sweet spot in the Fibonacci, and a daily engulfing. Once yesterday closed that way, you know coming into today is going to have a long. You just know. It's just obvious. Now, I tried to be cute today. I did enter a quick trade because I saw a quick drop. I was trying to catch and I missed my excels and I was trying to be greedy. I completely missed it. It came back to 0. I just closed it because I knew I was trading against it. That's why I put the signal in the group for like 10 seconds and I deleted it immediately. I was still in about $500 profit when I deleted it, but I knew I was violating the rule. I was trying to catch a quick because I knew I was going into my broadcast. I wanted to make some quick money here or there, but I eventually just shut the trade down to wait for the real move. So, well, we know if you drop now down to a 1-hour chart, each 1-hour divider is a day. So this is yesterday. This was yesterday, right? Well, the question is, today we expect price to dip back into yesterday, find some support somewhere, and then move, right? When we see this, we know today's going to be an up day. Remember how the candles work? We expect price to open, drop down beneath that level, beneath the engulfing level, find support somewhere where we're going to come to that, and then move up. So there we go. So once yesterday ended, I drew my Fibonacci from high to low. So that was the move. That was the expansion. Remember I told you it is very common that the first retracement when there's a massive move only comes to a maximum of 61.8. or 38.6 if you are drawing your fib the other way. Now, could it have come down here? Yes, it could. It could have come down here. So when the day opened on a 15-minute chart, I am looking at 2 levels. Well, technically 3. I'm going to delete this now. That's done its job. We're looking at 3 levels. The first level is around the 61.8 level. We're looking for order blocks in the previous day to be your support. That's what you're looking for. Now, this is the first one here, anywhere beneath 78.6. That's the first one there. That's the one in ultimately respected, if you can look at it there. But what were the other options? Well, there was one here, which was why I was trying to be cute and see if I could make some quick money quickly. There's another one there. And there's come on, you stay in one place. And there's another one here. Of course, it could come all the way down here. However, if for the very first move, if it comes all the way down there, I'm looking at it with a side eye. Why are you coming back so cheap so soon? It means someone who knows something doesn't trust this move. So that wasn't on my radar. I didn't think that. Again, you just watch for what happens. But I thought it was going to be one of these 3. So again, what am I looking for? I'm looking for, the way I trade, a 1 hour engulfing in the right direction in any of these 3 zones between the hours of 6 to 10 and 12 to 3. Guys, it really is that simple. I don't know how to say it to you. It's simple. It is really so simple. It's not rocket science. No trend lines, no stochastics, no MACDs. It's just understanding how the banks trade. 6 to 10, 12 to 3, 1 hour engulfing in the predetermined direction at a predetermined level. And I got my 1 hour engulfing in the first zone. What time of the day was it? Was it the right time? Yes, it was. It happened at 8 a.m. That's 6 a.m. in the morning. So 8 a.m. so 8 a.m. server time. That's 6 a.m. in the morning. Now, where was I at 6 a.m. in the morning? I was asleep. I was up till 3 a.m. last night. I was asleep at 6 a.m. in the morning. My wife would tell you that. I don't know if I snore, but if I do snore, then I probably was snoring. And so I missed that entry, which is fine. Now, if I had taken that entry, this would have been it here. That would have been the engulfing there. My stop loss would have been there. And I would have made 1, 2, 3, 4, 5, 6, 7. Right? That would have been my profit. 721. Not shabby. On this account, that would have been 1,340. However, look at the bottom of my screen. Can you see that I missed the original entry and I still made more than if I had taken the original entry? Look, how much did this trade make on this account? Now, I showed you guys this trade. Again, this is not for those of you thinking, yeah, he just picked. Nope. I have the receipts. Someone say receipts. I have the receipts because you guys in Telegram can vouch for me. One quick second. Let's see if I can find it. That I put it in the group. Did I put it in the group? Right. I don't know if I did, but anyway, I posted. Okay, that was after I closed it. So that I was up and about. I was, moving around. I think I'd gone to pick my boys from school, and I was getting out of the car to get them out the school gate or whatever. So I took a quick picture. But I showed you, right? There we go. I didn't take the full trade again because I was trying to be cute. I was trying to be cute before. I had to get out of it. Sorry, because of my broadcast. But that's my live account. So I didn't make as much money on my live account. I only made $500. But on the demo account, and I closed this trade in your presence today. When we started this is what it made on the demo account. How did I miss the original entry and still end up making more than if I took the original entry? Because trading is about ratio. It's about the ratio of risk to reward, not necessarily the rate. Not necessarily. It's not how many pips you travel. If I take in the original, people say, "Oh, I made 100 pips a day." I don't care how many pips a day you make. I care how many pips a day you make based on how many you risked. You risk 1% of your account on your entire stop loss. And if you do it that way, I can make more on a 50 pip trade than I make on a 100 pip trade. So, the moment this happened here, price broke market structure there. I'm going to delete these now because it's not needed. Price broke market structure there. In fact, before it gets there, it actually breaks it down here. It broke market structure there. And then again there. At this point, it confirms to me that I was right. And what does it do? It comes back into that area. Remember, I've always said that wait for it to come back into the area of the market structure break in the first place. So just stick a Fibonacci. Again, high to low. And what do you know? Bang, 21.4. And where does it come to again? The original, in essence, it gives you a retest. It gave you two retests, one here and one there. This trade was begging you to take it. It was begging, please take me, please take me. Well, if you're going to beg me to make money, I'm going to say yes, right? If the Forex market is going to beg me, please take money from me today, you would be unreasonable. You'd be disrespectful. You'd be, what's what I'm looking for now? You'd be offensive to say, no, keep your money. So on the retest, because bear in mind, it could have just kept dropping. But on the retest, it reacted and formed another order block there. Aha. Now, look at this time for me, please. Where did this happen? This here is, it came up, so it formed that, so this is 3:15. That's 1:15 UK time. For those of you who are on my Telegram group, can you tell the world what I was doing at 1:15 this afternoon? Some of you know. Where was I at 1:15 this afternoon? Gerard, can you tell the people where I was at 1:15 this afternoon in the group? I was on my broadcast. In fact, if you look here, I entered this trade at 1:50 in the afternoon, not 1:15, 1:50. Because this was going on while I was in the broadcast. The charts were on my wall. And I was like, thank you, Gerard. Kingdom Emotion is the broadcast. I was like, I've missed this trade. I've missed this trade because I'm here, doing the work of the Lord in my community. But it kept hanging around. And finally, in the broadcast, I said, you know what? I'm just going to take this trade. It's begging me to take it. So while we're talking about the police, I just clicked on the button and did this. That was my entry. That was my risk. Second. That was my entry. That was my risk. And what's the ratio? 1, 2, 3, 4, 5, 6, 7, almost 8. Having missed the first, let's see now, from here to here, having missed the first 22 pips of that trade, I still made just as much money as I would have if I got in at the beginning, because now price has given me a lower risk stop loss. Let me show you again. That's the expansion. 21.4 level. And it forms another block there. Where does the other block form? At roughly the 38.2 level. I was in. And I literally, on this one, now I closed it on the live account because I got so distracted while I was in the broadcast, I couldn't hack it. So I was like, you know what? I'll take my $500 and go. However, I left it to run on my demo. And this is this trade here. Ta-da! Actually, I got in. Actually, no. Yeah, because I got in here. Like I said, it kept. I'm like, you know what? If it's going now, I really wish I got in down there. That would have been so beautiful. But anyway, I got in here. Still the same thing. And I put my stop loss there because by the time this had moved, let's drop. Yeah, by the time this had moved, with that, I did not believe it was going to come back into that level because it'd been hanging around there too long. If this had come back to that level, I would have closed the trade because I would have thought it's going to go down. Anyway. To call a long story short, and we literally closed just today as the day was coming to an end. I could have closed up here. Now, where was my target? Let me show you my target. There's my target. Again, why is my target there? Same thing I showed you on EU. There's an intermediate high here. So I knew that was going to be taken out because there's plenty of liquidity resting there. And where is that? Is one order block. However, the same way I revised my target on EU, I also revised it here because I thought, it'll be just like them. This looks like a more obvious order block to me, in which case someone is going to have a stop resting there. And so I think, yeah, so I just, okay, so this is proof that I took this trade in the broadcast because I should have put this 3 pips below. But I just put it there because I was in a rush. But anyway, there you have it. That's how you make $1,392 pips or dollars. Now, if I taken the entire trade fully on my live account, it would have come to about maybe $800 on my live account. So I think I left about $300 on the table or thereabouts. Maybe $400, maybe it'll come to $900 anyway. It is what it is, but that's the trade. And again, just simple. Come into the week with a bias. Come into the week with a scenario. See if you're right. If you're right, you get paid. If you're wrong, you don't take the trade. And then if you're right about the scenario, but then the trade doesn't happen the way you plan it, then you take a loss. So final one, Swissy. Okay, so I'm currently in a Swissy trade on this account. And so this one is currently losing, but that's fine. But I took one yesterday on my live account. It was sweet. Now, this trade was mirrored on my demo, so I'm going to show you the demo, but on this particular trade, my live trade and my demo trade were pretty much identical. Right, where am I? Actually, I can show you this one because it's happened already. So 1 second, let's go to the Telegram group. Again, these are all, they're not hindsight. They're all given. So yeah, so that was the initial EU trade, the one I told you that I lost because I was jumping around. Right. It was in profit at some point before it bailed on me. Where is the Swissy trade? There we go. So I took the trade before I gave it to the group because it moved too fast for me to give it to you. So that was my entry there. And then when the trade had played out, this is what it looked like. Yep. That's what it looked like when it was done playing out. By the time I closed it, I'd already moved my stop into profits. I'm going to show you quickly how I analyze this trade, and then we're going to call it a night. So, Swissy, let me open a chart, a Swissy chart that, 1 second now. Give me a quick second. All right. I'm tempted to just close this trade because it's getting in the way, but I'll show you anyway. Now, this one, like I said, I'm not in this trade on my live account because it's a little bit of a risky trade. So I'll take, obviously, you take trades on a demo, you won't take on a live because you're testing out some stuff. And then I have a serious demo, which I track my performance in properly. And then I have a throwaway demo. So I'll take all the trades on the serious demo on the throwaway. Some trades I won't take on the serious, I will take on the throwaway. But the live and the throwaway are pretty much mirror images of each other. Except that there are some trades I just won't take live because I don't trust them, but I'll take them on the serious demo. So this is the trade on this particular demo account that I'm showing you. Let's put this dividers in. So again, let's go to weekly. So we start the week, right? Weekly chart. Again, at the start of the week, that hasn't formed. What do we expect? Notice how this is almost the exact opposite of EU. Look at that. Look at that chart. Let's look at the EU now. Let's remember what EU looked like on a weekly. Nope. Right. Okay, let's open a new EU. Okay. Boy, I'm looking forward to my sleep tonight. I tell you that for sure. Right, get rid of that and that. So on the weekly EU chart, look at that. Can you see that? Let me show you what I mean. I'm going to put that at the top of the screen. And I'm going to put that at the bottom of the screen so you can see what I'm talking about. And tell me if you cannot see that these two charts are mirror images of each other. Can you see that? In EU, the dollar is the second pair. In USD, it's the first pair. So here, this is EU over USD, or Euro over USD. Here, this is USD over CHF. So as EU is rising, we expect CHF to fall, and vice versa. And if you can see, let me show you what I'm talking about. See that line there? Let's look at the same line here. Okay, so I'm going to move them till they're in sync. There we go. You see that? As one forms a high, the other one forms a low. And vice versa. They are mirror images, and they should be. This is what we call inverse correlation in trading. So there's the high. Let's start here. There's the low. And there's the high. And as you can see, there's a rejection from this area here. There's also a rejection from this area here. So all I have to say on this basis is the same analysis I did for EU at the start of this webinar, flip it, and it works almost perfectly for CHF. Right, now let's go into it. So we see price coming to this level. And then there's a sharp rejection a couple of ways. So coming into this here, the question is price going to go to this? There's a block here. There's an order block there. Is price going back there for the 5-hour taxi? Or does it want to just pick up the 15-minute taxi here? And so common sense told me it was going to tap into this liquidity pool one more time before it started going off the other way. So coming into the week, this is Wednesday, Tuesday, Monday. So this is what we saw on Monday. And again, this is why I don't trade Mondays. One, I can rest. Two, it gives me some, that's Wednesday, Tuesday. It gives me some insight into what's really going on. So this was how Friday last week, what happened on Friday last week. Actually, no. This is a daily chart. Sorry. What am I saying? This is a daily chart, so this is a daily chart. So there is a daily engulfing here, bearish. And then, so this is, I said Wednesday, Tuesday, Monday. Okay, fine. So this is what we would have seen as at Monday. That there. So you come here. There is an order block there. I'm just going to put it so you can see. There's another block there. And so to start the week, we were confident the price was going to take the 15-minute taxi ride as opposed to the 5-hour bus ride. It's going to dip in here one more time. You drop down to a 4-hour chart. And you put your Fibonacci in. Now that's the current controlling high and current controlling low. Wednesday, sorry, no, so this week. So last week it came all the way down to the sweet spot there, target zone, came back up and then dropped back in here again. When it did that, let's go now to a 1-hour chart. So this is where the magic begins to happen. How analyze that move? Well, this is Wednesday, Tuesday, Monday. So on Monday, price drops down into that level. If I had been trading on the Monday, I would have taken this trade. This would have been the trade if I had been trading on a Monday. I would have taken this trade here. There. Can you see that? That's the order block there. And I would have made, let's see what I would have made. I'm going to get rid of this Fibonacci now. I would have made, if I taken it there, the 1 hour engulfing. I made 1, 2, 3, 3 to 1. Not too shabby. But as you can see, it's a very wide stop loss. So I actually might not have taken this trade now that I think about it, because that's a stop loss 21. It's not that bad actually. It's not that shabby. So I might have considered it, but I can see very clearly here that this high here is holding things up, and until it breaks through, there is no guarantee that this trade is going to successfully break that level. That level there for me at the start of the week is the boundary, the controlling boundary. So I would have done my calculation. If I'm taking a 21 pip stop loss, the most I can make is 82. Okay, that's 4 to 1. So yeah, I would have taken the trade. But I don't trade on a Monday, so it is what it is. And then we have this here. It comes into that zone. Now, under normal circumstances, right? This is what you would expect. This is where your discretion comes in as an experienced trader. This is what you would expect. That's the Fibonacci for the day, right? The price would come in and respect an order block from the previous day. It would perform a stop hunt here into that order block. And then go long. But remember what I told you to look for tomorrow. Let's go back to the EU one. Let's see if we still have it on the EU one. Right. One second. Let me find that particular. Where is it? Right. Where were you? We just did some. Okay, I think, is that it? Yep, that's it. Nope, that's not it. There it is. So remember what I said we're looking for tomorrow, that we have two options. Remember this, right? That it could respect that zone and then go for a ride. Like it did on GU. That's what happened on GU. It did that. It respected the zone there. There, and then we went for a ride. So that's what GU did today. That's always option 1. See that? That's what GU did today. However, option 2 is this. I told you, if it breaks through that zone before 6 to 10, comes back up and then drop and then reacts there, then I know it's going down. Well, that's exactly what it did on the Swissy. If I can find it now. That's exactly what it did on Swissy. Okay, I'll just use this here. That's the actual trade as it was taken on this account. So we would have expected it to react there and go up. But So it did that, bounced up, and then it came to this level here. And something in me just, this is one of those ones where when you're an experienced trader, you can literally put aside sometimes your rules and just look at something and say, something is not right. Now, I want you to look at this for me on an hourly chart. This is what it looked like on the hourly chart. So, price looked like it was going up. It had reacted there and was going up nicely. It had taken out that high, but it just looked like a normal, it looked like a simple market structure break. But then it came down 1 hour, the second hour, the third hour, the fourth hour, and the fifth. So for 5 straight hours, it could not stay above that level. Can you see that here? Also, if you draw this line here to this high there, as you can see, it just nicked that high. So it had taken out liquidity here. Let me know if you guys are still following me. This is the last one. I'm going to close. We're going to close at exactly 2 hours. So in 7 minutes time. Took out that one and then took out that one as well. Hour 1, rejection. Hour 2, rejection. Hour 3, rejection. Hour 4, rejection. Hour 5. At this point, I knew something was up. And so when it came down to hour 5, the moment I drew a line here, why did I pick this line? I wanted something to tell me go. So I just drew that line there. I said, if this comes down one more time and passes through there, I'm in. And it did. Now, see what it did here? Like EU, like I told you to watch out tomorrow. It breaks through, comes back and goes. I could have waited for that on the 15-minute chart. See, it would have worked out for me. It broke through. See, came back. That could have been my entry. But I didn't wait for that. This just told me this thing's going. And so I went. And it was beautiful to the tune of $1,000 on this account. That was my exit, but I just got out there because it was the end of the day. And so I'll do that a lot of times. When it's the end of the day, I'll just get out. And my plan was to enter tomorrow. By the time, as you can see, that was my exit point there, which interestingly is exactly where price is now. But it completely blew through my take profit by quite a little bit more. Yep, Gerard, there was a strong liquidity pull downwards. Now, by the time, it opened up in the morning. When I would have taken the trade, when I was taking the other 2 trades, roughly at about, so this, I wasn't satisfied with this because I knew once this day opened, I knew this high was going, right? I was waiting for that high to go. I needed that high to go because I need an intraday liquidity run, an intraday stop hunt. By the time I got that here, and also if that's going to happen, then I needed to go into the previous order block just above it, which is there. So by the time this happened, and then I get a 1 hour reaction, so this would have been my entry here. This 1 hour reaction, no, that's 15 minutes. Let's drop an hour chart. So yeah, this would have been my entry there. By the time that happened, I was already in the EU trade. Secondly, that there is not worth it for me. Because this is the 1 hour reaction. I would have to put my stop all the way up here. That would be 13 pips to make 23 pips to get to my original exit. Can you see that? I would have had to risk today 13 pips to get to my original exit there. 24 pips. It did not make sense to me. And so by this time, I was already in EU and GU. I told myself, just wait for the bounce back. Now, I thought this trade that I'm currently in now would have been triggered. Let's see, where is this particular one? So I can find it. Where are you? Yeah, here. So I thought this trade would have been triggered tomorrow. I put it in there because I thought it was going to be triggered tomorrow. But it has triggered today, so I'm just going to stay in it. Now, the fact that it's triggered early today concerns me. I will confess a little bit because I know there will be some playing around in Asia, in which case it could dip beneath that there. It could end up taking out that low tomorrow and running into this order block here. So I am actually tempted to close it as it is right now and just wait. Close it for $4 when I'm making $1,000. That's nothing. But I am just going to wait and see what it does. Just going to wait and see what it does. So yeah. I think it should very easily get back there. But we'll see. Or I could just close it tonight. We'll see. Right. Can you guys still hear me? Let me know that you can still hear me. I just had an issue with my computer here. So yeah, so that's how these things work, really. That's how you made that trade, and that's how I got into this current one. Like I said, this is triggered slightly earlier than I thought. So we shall see. Any questions before we call it a night? The video will be live on YouTube as soon as we're done, so you can go back over it. Also, what am I looking for tomorrow? Well, I've shown you what I was looking for tomorrow. This is what I was looking for tomorrow. Perhaps this will have been a safer entry. In fact, this here actually would be the best bet tomorrow. Now that I've seen what today has done, this would be a very, and you know what? I think I'm just going to close this trade to be on the safe side. Let me look at it from an hourly chart. Yeah. I'm just going to close the trade. If it wins, I don't care. I'm just going to close it. $23, I'm just going to close it. So I'm going to wait for that. It could go up from there, in which case, fine. But as a trader, my primary concern is to preserve my money before trying to make more money. So if yeah, that, now that I've closed it, now that I've closed it, I put a Fibonacci on it now that I've closed it, and I'm thinking maybe I should have left it open. The problem with leaving that trade open is the stop loss is in the wrong place for me. The stop loss is in the wrong place for me. Can you guys still hear me? Let me see. All right, so yeah, that stop loss was there, and for me that's too dangerous, right? I would not be surprised if the market maker cleans that level out just there. So yeah, that to me is a very high possibility tomorrow. I could be wrong, but it's just too clean for me. So I am going to bet that over the next 2 days, it probably does that. And if it does that, I'm going to expect it to clear that intermediate level there and run back into that order block there, in which case this level there would be my exit. So I'm going to put this trade in advance while you guys are here. So this is how this indicator works, the one that I showed you. Let's see. If I put that there, that's 16 pips. So 1, 2, 3, 4. 4 to 1, 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 4 to 1. Am I happy with 4 to 1? Is this trade worth it to me? Is there a way I can refine my stop loss? Let me see. If I were to move my stop loss, if I were to move my entry down there, this looks more appealing. Now, again, this is the danger with being cute. Like with EU the day before, I could have missed the trade by 1 pip. But, so that would let me 1, 2, 3, 4, almost 5. It's not much of a difference. It's not much of a difference. Now, if we framed it on this right here, now you're talking. That would be 1, 2, 3, 4, 5. Yep. Now I'm happier with that. Okay, I'm gonna put this trade in and go sleep on it. So market execution. Nope. I want a pending order. So it's a buy limit because I'm expecting price to dip in and come back out. My entry price is going to be 0.9438. And then modify order. What have I done? Pending order. Yep. And then my stop loss is going to be 0.9426. My take profit is going to be here. That's 0.95008. 0.9500. Place. Right. So if I move that and I move the Fibonacci, yeah, that because you see, this is pretty much a clean low. Like I said, it's pretty much a double bottom. The question is, how far down into the order block will it dip? That's the order block there. I think the body of the candle will hold it, which is why I chose that. So yeah, I like that. Again, it could just nick this and come down, but by the time it goes beyond there, I believe if it passes there, it's going to pass the order block anyway. So again, these are just some of the tricks of the trade you learn as you get more experience. I just suspect that if it passes that stop loss, it's gonna. So you might as well lose there if you're going to lose there anyway. Yeah, and so I could be telling you tomorrow that I won $1,300 or that I lost $253. That's 5 to 1. I'll take those odds. If I take this kind of trade 5 to 1, 10 times, if I win half of them, so let's do this 10 times. Right? If I win $1,300 10 times, that is, what's 13 times 5? Somebody do the math for me. 1311 times 5 is 65. So 6,555. Let's put that there. So 6,550. That's 5 wins at 5-1 versus 250 times 5 is 1,250 versus 5 losses at 5-1. That is an overall profit of, so 6 minus 1,250. That's an overall profit of $5,330. Who would take that? Do you think those are good odds with the information I've shown you, with the examples I've given you for the last 1 year? Do you think we could go 50-50? So even though this is a little bit risky to me, but I'm leaving it there just to give you to show you. Of course, this is a demo account. That's why I'm going to leave it there. Even if we lose this trade, we're not losing this particular trade more than 5 times out of 10. This is at worst a 50-50 trade. Well, with this odds, 50-50, that's the result. If you trade 10 times, you win 5, you get 6,550. If you lose the other 5, you lose 1,250. Overall, that's 1,000. No. 1,000. I did, my math is wrong there. 1 second. Yeah. 1 second. It's 5,300. Sorry. Yeah, that's bad math. 5,300. Every 10 trades. I'll take that. Thank you very much. Now, it could just be that this is already, in essence, I could have missed out on the trade already, closed it too early. This could just go up straight from here tomorrow. Will I lose sleep? No. Because there'll be another trade. I guarantee it'll give me an entry in London. If I'm awake in London tomorrow or in New York in the afternoon, it'll give me an entry. But I don't want to sit through the uncertainty tonight. I don't like being in the market during Asia unless I am in an already established trade. So, folks, I am going to call it a night there. Feel free to ask me questions in the Telegram group for those of you who are registered with our Wealth Academy. If you want to know how you can register with the Wealth Academy, I'm going to show you. Give me a second. So, 1 second. Let me move this here. So, you are now watching what we are watching. So, this is what we're watching, what you're on at the moment. If you go into the description section here, let's jazz that up a little bit. Let's zoom that in. If you go into the description section, you see that email address there? And that WhatsApp and Telegram number. Well, that number is going to change anyway. We're changing the WhatsApp number now. So we've changed the Telegram number already. So that, but that we will still get that number. So you can send it there. We will still get it. But just send an email to that email address. It is $79.99 a month. It goes up to $149.99 a month at the end of this year. So if you get in now, between now and December, you get that price because we're just starting out and we want to show what we can do for you. Righty-hoo. On that note, folks, it's been a great night hanging with you. Take care. God bless. Enjoy your trading. See you tomorrow. So, yes, before I forget, tomorrow, 9:15 tomorrow, Joshua has a session with the newbies. uh, and I think it's 11 or 10 or 11. I'll confirm with you guys in Telegram, but I think 10 a.m. in the morning, he's going to have a private session with the new traders to carry on with some of the stuff I showed you yesterday, in terms of making sure you're okay with your charts and you know how to take your trades and follow signals. So uh if you are ready from, I think it's 10 a.m. or 10:30, we'll confirm in Telegram. Joshua will be live with you guys to attend to your needs. Bless you guys. Take care. I am going to sign out now. Don't go anywhere just yet. Wait for it. Wait for it. Wait for it. Wait for it. Wait for it.